Good morning. Welcome to another episode of Inside Crypto. I'm Tomasz Piwonski, manager of the Solution One Fund, and in the Inside Crypto program, as every week, we'll summarize the crypto market through the eyes of a hedge fund. Bitcoin, take a look here at the chart. We've marked these resistance and support levels drawn based on position liquidations. I told you back then that I absolutely couldn't imagine that 106,000 wouldn't be touched. And that's exactly what happened. The market reached that level very quickly, cleared out the stop losses, and then pulled back. The 106,000 level worked beautifully, and the same goes for the level below. Take a look. We've marked the support line here, which is based on position liquidations. These are the two accumulations marked here with two lines. It worked perfectly as support, just beautifully. If someone followed this method that I've been promoting here for some time, they could have made substantial profits. And moving forward, following the same logic when it comes to downward corrections, you can catch some nice longs around the 106,000 level. There's a good chance here that someone will be tempted to trigger another sweep, a pullback, and at 106,000 entering a position should be a great deal. On the other hand, liquidating short positions up to 106,500, it's a very narrow range, as you can see now, up to 106,500. No brainer. I just can't imagine otherwise. It's just too tempting not to clear that out. It's like there's no way that won't happen. And after that, we're already at all-time highs. So it gets tough because although there are big liquidations at 111,000 and there's resistance there, it's both technical resistance and an all-time high at the same time. It's just too obvious a level for me personally. But out of journalistic duty and responsibility, I'm just saying that these levels, basically the supply line, the competition for taking short positions at these levels is so significant that it's hard to manipulate here. However, up to 110,000, that level is definitely there, and it can absolutely be cleared out if the right conditions are met. That one is uncertain. Since it's also the all-time high, I wouldn't be so sure about it. But that 110,000 will be reached and stop losses will be cleared there. That's much more certain. And here, taking short positions at 110,000 with a stop loss somewhere around here or even higher definitely makes sense. And similarly with Ethereum, looking at what has happened over the past 2 weeks since there was no show last week, here we marked the resistance level, and as you can see, it worked beautifully. As I also told you, I couldn't imagine the market not wanting to clear out those stop outs here. And that's exactly what happened. It reached this level beautifully, but before that there were declines, and at first the drops were halted here, but later this support line was broken. But as is usually the case with these liquidation levels, with liquidation zones, even though the market broke through the support, there was still plenty of time to come back afterwards. So you could have profited here once and even a second time, because despite the break, there was still a rebound. That's just how it is with these liquidations. I've told you how this works. Basically, hedge funds manipulate the market and push it to force people out of their positions, and that's where they close theirs. The point is, by pushing the market up to those levels with their own orders, they achieve their goal. The price on the market keeps getting higher, and they end up with a higher and higher average purchase price. But the point is to collect liquidity, right? And the real trick isn't just buying at higher and higher prices and ending up with a high average, but being able to exit later. What's the point of accumulating if you still have to exit those positions and look for liquidity? And very often in crypto, that liquidity is sought during liquidations. It's the same in traditional markets, except there you have to guess more where those liquidations are happening. In the crypto market, we have the advantage that we can actually observe this and see what those hedge funds are up to. In traditional markets, it's not that simple because there just isn't that kind of information available. However, recently when I was in the States, I spoke with a trader who has been trading options for 40 years, and he told me about a situation where he had opposing positions on gas, probably gas futures contracts or something else. I don't remember exactly, Maybe it was oil or something else that's not very liquid. I think it was, well, never mind, the details aren't important. And he said he had opposing positions on 2 series of contracts. And then, to his surprise, for several sessions, session after session, one contract would rise by the maximum allowed limit, 10% up, while the other would drop, and he bet that the 2 series would converge, thinking it was some kind of anomaly. But the market simply started doing something completely bizarre. He began losing on both positions, just losing on one and on the other and on one again. And every day he would say that there was a 10% maximum range and a margin call, a request to top up the margin, and then it just led to a huge anomaly. And listen to what happened. He went bankrupt because of it. Basically, he lost everything. This was probably about 20 years ago, and he thought he was bankrupt. He was simply devastated, and then something happened. And later, in some random conversation shortly after, it turned out that someone had called the brokerage house, pretending to be from the supervisory authority, and said, "Well, I wanted to ask who this is. Who has such large positions on these longs and shorts, such positions? Do you know who it is?" And the brokerage house fell for it. Remember, this was about 20 years ago, so people weren't as cautious back then. Someone who claimed something over the phone was considered credible, and someone from the brokerage house bought into it and said, "Well, this investor has such and such funds and so on. There's nothing to worry about." But in reality, it was the competition. Someone who wanted to force him out of his position and wanted to use this manipulation to manipulate the market in order to push him out of his position. And that's exactly what happened. They took over his futures contracts. When he ran out of funds for the margin, some big player scooped them up, and from both sides, it ended up with a court case, pre-trial negotiations, and eventually they reached a settlement. Yes, he got back what he lost, or at least I don't quite remember, but generally he came out of it relatively unscathed because they reached a settlement. Well, I rather think that I could win this in court. But since in the States people don't want to go to court, very often cases end in settlements, pre-trial settlements. And that's just a side note. And on Ethereum, following this line of thinking, 2,582, and then a whole bunch more here. Unfortunately, it's spread out quite evenly, and it's hard to say whether someone will want to take advantage of it or not. But anyway, between 2,438 and 2,553, the whole area, I don't know, maybe next week we'll draw it with a thick line or a lot of lines. So, the entire area where the market could drop below 2,430, I would already be worried that it didn't work out. But from 2,430 to 2,580, that's the whole zone where you can definitely accumulate. Although I think even from 2,500, because here there's already strong competition for those positions, from 2,500 to 2,580, that's the whole buying zone. And as for the upper side is a similar situation, up to 2,710, that's the whole zone. And then at 2,740, you could still be tempted to throw out those patients here who will be liquidated. And I'll take this opportunity to mention our project, Brightpool.Finance. Cointelegraph wrote an article about us, among other things about our magical DeFi NFTs. That is, NFTs that first of all serve as a key and grant access to our platform, which for now is invitation only. And inside you'll find halvings, a very early halving stage of our BRICS token. But besides that, each NFT gives the right to buy or sell Ethereum at a historical price, from around $20 up to $5,000, depending on which price you draw. And these NFTs are meant to be a symbol of this service that will be launching soon, which is price freezing. Freezing the price, meaning the ability to lock in the price of an asset, say Ethereum, and use that price within a week or a month, depending on how long you freeze it for, regardless of what's happening on the market. And all of this is possible thanks to options, the Nobel Prize winning mechanism underneath, which is exactly what Cointelegraph is writing about. And that's all for today's episode. Thank you very much for your attention. See you and talk to you next week.